Welcome back to the Banks Committee, Representative Lanoue.
Good afternoon, Chairman Doucette, Chairwoman Miller, ranking members Berthel and Delnecki, and members of the committee. For the record, my name's Brian Lanoue, state representative from the 45th House District. I got 4 or 5 great towns in Eastern Connecticut that I'm proud to represent now in my 3rd term. I'm here to, and by the way, it's great to be back to see you all and be in the same room. With a heavy heart, I've left the banking committee, but it's so great to see everybody again from the committee and some of the new members as well. I'm here to testify in strong support of HB 5207. That's a bill I'm very proud to have introduced this session. And what it does is it makes sure and ensures during the foreclosure mediation process that an agreement that's reached between the bank and the homeowner, that once the agreement is reached, the ink is signed, the first payment cannot be due less than 15 days before the actual agreement was reached. After the agreement was reached. As many of you who know me know, I'm not a big regulatory guy, especially in the lending industry. I think we need to have the flexibility for folks to lend money, and that's what generates commerce and really keeps our economy going. However, there has been an issue that has been brought to certainly my attention, something I've experienced, and that's in the foreclosure mediation process. There has been times where banks have reached an agreement with somebody who is in a homeowner that has fell on hard times, was unable to make their mortgage payment for one reason or another, was able to get other employment, get back on their feet, and the first payment was actually due. They set the first payment due in the agreement after the date is actually passed. So, for example, if the agreement was signed on February 15th, the first due date was February 1st. So we're sort of going back to the future. And then the second payment would have been due March 1st. So it's essentially in less than 2 weeks, somebody who is just recently getting out of hard times, trying to get back on their feet, is getting whacked twice in the same month with 2 back-to-back mortgage payments, in literally less than 15 days. So what this does, what this bill aims to do, is simply say that you cannot sooner than 15 business days after finalization of that agreement set the first due date. So if it was around February 15th, the first payment would be due, I think, March 2nd. You can't go before that. That's all it does, and it just ensures that the homeowner has that opportunity to succeed, and we don't want to have an agreement that's essentially going to be set up for failure.
Okay, thank you, Representative Lanoue. Thanks for bringing this forward. And it's interesting. I think you and I came in at the same time, and I think we experienced some, but missed most of the conversations about whether or not this program was really good policy, whether it was necessary. It was enacted, as you know, back in 2009 in response to the foreclosure crisis back then. But I think, your proposal shows, and I think it reminds us at least that, this program that has helped so many people, and that frankly, we hear that the financial institutions are at this point used to working within the confines of this system and this program, that it helps people and it helps the banks as well, the mortgagees come to a resolution, and is successful in the vast majority of cases. And you've given us something here that I think would be a relatively minor modification to the program. I think it's within our purview, as I've read that statute over the years, to do something like this within the process, and to have the mediator sort of facilitate what we're talking about here, which is just the timing of the payment to be appropriate. for the mortgagor to resume those payments. So I appreciate you bringing it. And I'll see if my committee members have any other questions. Representative Hoxa?
Thank you, Chair Doucette. And thank you, Representative Lanoue. I certainly appreciate this bill. Working, I'm still involved in banking. I still work in the banking field. And, the concept of compassion was brought up earlier, and I think this is a good example of that. And compassion is one of the virtues that I hold in highest regard and try to practice on a daily basis. And I think this is a good attempt at that. From my experience, and I've had experience mainly with state chartered banks and local banks and credit unions and things of that nature. I believe in most cases, when an agreement like this has been made through some sort of mediation process, that most banks, at least chartered in the state of Connecticut at the state level, act in good faith and don't try to pull a stunt like that, which is certainly disgusting by all standards. But with that said, obviously if there is a need for codification of the something like this into law, to make sure that nobody slips through the cracks and bad actors can't act badly, then I would support something like this. With that said, it should still be incumbent upon all of us to work with our staffs, work with our staff, respective staffs, to make sure that maybe there isn't already something like this on the books, and that it's not a redundant piece of legislation that could cause some mess in the process, but it does seem at the very least like it's very well intentioned and serves a pretty clear cut purpose. And it does sound like something I would support if there isn't already something that addresses this issue on the books in a similar fashion. So yeah, thank you for bringing this up. And yeah, I have no further comment or question. Thank you.
Thank you, Representative. I appreciate those comments. And I could tell you, as far as being a need for somebody had brought this to my attention a few years ago. I had mentioned it, a constituent, and I was thinking maybe I misinterpreted it, maybe they misinterpreted something. And without sounding self-serving, I've recently gone through this program myself, and it happened to me. And I've learned it's happened to others. So it's happening, and quite frankly, it shouldn't be. And I think we need to give people every opportunity to get back. And I recognize, as people who have mortgages on homes, the bank lends that money, and the bank is fully entitled to be owed that money and owed that those mortgage payments. However, going through this program, through months, and people who are getting back on their feet and getting back with employment and getting out of their financial crisis, we want to make sure that the agreement that's reached is meaningful, and gives the opportunity for the mortgage holder, the mortgagee, the homeowner, every opportunity to succeed. And we're not asking for months or weeks here. We're literally talking 15 days after. Make sure, let's let the ink get signed. Let the ink be dry. Let the homeowner have a glass of water and get back on their feet, and be able to meet their obligation.
Thank you. Senator Miller.
Thank you, Mr. Chair. Representative Lanoue, I want to say thank you. Representative Santiago was a dear friend of mine, and he was compassionate about that particular program. And I know if he was here today, he would thank you. This is representative of who he was. It wasn't about making sure that, not only making sure that families were made whole during this process, but to make sure it was done correctly. And so I want to thank you for bringing this to our attention. And so one of the things that I look for in the legislation that I bring forth is racial equity and compassion. And this is definitely a bill of racial equity, and it's also a bill of compassion. So again, thank you very much for bringing, I should say, a concept. We haven't made it a bill yet, but again, thank you for bringing it to the committee's attention.
Thank you so much, Senator. I appreciate that.
Thank you, Senator. Senator Berthel.
Thank you, Mr. Chair. And I would align my comments with what my good chair in the Senate just spoke to. This is common sense. And I was going to ask you if you had a constituent that brought this to you and you're sharing that this is something you've personally gone through, is very personal. And I thank you for enlightening us with that. Many times as legislators, we do have personal experiences that drive thoughts and good ideas. And as Senator Miller just spoke to, Representative Santiago would be honored to have supported this. He was chair of this committee up until the time of his very untimely departure and death. So thank you, Representative. And it's good to see you. I wish you was still with us here on this side of the desk, but I know you're doing other great things throughout the legislature. So thank you. Thank you, Mr. Chair.
Thank you, Senator. And I'd like to just add too, I was as a freshman and being the first year in the legislature and on the committee, the banking committee for the first year, as Representative Doucette was, we were kind of aligned and we were in the same we were walking in each other's sandals. I call him Zeke. Zeke Santiago was a tremendous human being, a very caring man, a great chairman of the committee, and just made us feel very welcome and open. Really welcomed that open dialogue, and I was very appreciative to get to know Representative Santiago, and I think it's very appropriate that this program was named after him.
You're here. Agreed. It's good to hear his name. I think Representative Delnicki may have a question as well.
Yeah, I'll keep it brief. I want to thank you for bringing forward in the discussion we had prior pertaining to this issue, because this is the kind of issue that we want people to be successful when they work to make things right, when they avoid foreclosure. And the last thing we want to do is to see a tripwire set up before them that could cause them to fail in that effort. And literally that short period of time that you're discussing here could make a world of difference and take the program to a much more successful level. And having had the pleasure of serving with Ezekiel for a short period of time before he met his unfortunate passing, I know that this is something that he would have wholeheartedly supported. And again, thank you for coming forward with that, Representative.
Thank you, Representative. I appreciate it.
Thank you, Representative. And we'll continue to go around. Representative Palillo has a question.
Thank you again, Mr. Chair. Good afternoon, Representative. Thank you for being here as always. Quick question. This wouldn't change, and I'll say that I appreciate you bringing this forward. This is practical, common sense, and is going to assist so many folks. But this wouldn't change interest calculations or grace periods or anything along those lines, just the first payment.
Yeah, it would not. Matter of fact, those 15 days were that 15-day buffer. I mean, interest and the money that's owed even during that period would still accrue. So absolutely, that would not change any of that. This would it's just a matter of structuring the debt and when the first due date for the payment is due.
Thank you for that clarification and thank you for that information, because it is so practical. And when you're servicing debt from both sides of the agreement, to make sure that the first payment, the first month, first quarter, everyone is aligned, because that's going to generally prove to be a more successful contract, certainly, and benefit all parties involved. So again, thank you for this common sense proposal and your thoughtfulness today, certainly. Thank you for being here.
Thank you, Representative.
Thank you, Representative. So I think those are all the questions. Again, thank you for joining us back at the Banks Committee, and we appreciate your testimony today.
It was my pleasure, Mr. Chairman. Always a pleasure. Thank you so much for listening.